Hey, what's going on, family? It's Mike back with another video, and in this one, I pretty much wanted to show you guys how I was able to go from really from $100 balance down to a $69 balance up to this what you see here, $420 P&L for the week. This was last week on UJ's move. You can pretty much see it right here. And for those of you guys who are new and you haven't seen any of my videos, UJ is one of my favorite currencies to trade. I just like it a lot because of how smooth structure is and stuff. So this is something that I trade the most. So this is pretty much how it happened. This is a live account as well too. You can see the live over at the left side of the screen. I do use Trade Locker. They are affiliated with KOT, and I can show you guys the withdrawal proof right here. You can pretty much see that I'm not BSing. So not 420, but I ended up taking out 450. That's pretty much what I ended up making in total of the trade. That's where my balance was. So that's what I ended up pulling out. So most importantly, I wanted to kind of just go over with you guys on how what I was particularly looking for. And mind you, you can kind of see how price pretty much was headed in the upward direction. If I go to the daily, you can see that I had the daily higher low marked right here. I had it labeled, and this was the weekly high based upon what I saw on the higher time frames, and the weekly low right here. So weekly higher low, weekly higher high, and then now I just feel like price is going to pretty much trying possibly continue going bearish, or she could go back bullish. But before I see any of that, I would, or say any of that, I want to see some breaks, which is kind of what she's kind of trying to give us now. Markets are open now, like she's coming above this area, and we may possibly be able to see a break something like this and continue up to the upside, but we never know. But the good news is what you always want to do is be in line with the momentum of your higher time frame structure. So the momentum candles for me are always the daily and the weekly and the monthly candles. Those higher time frames are going to really allow you to gauge the momentum of how volatile price is, if you're going for buys or if you're going for sells. And then you could go to what I like to do is I like to go down to the 4-hour time frame, like so, to figure out the structure of it, like what kind of structure I'm in. And right here, we had a lot of valid structure over here to the side. And as you see, I even got past positions on where I've taken opportunities on UJ. Some good, some bad, but this, it's the part of trading. And I'm learning too that less is more. Less is more. So when you wait on price to get to that particular area of interest that has the most confluence, where all of the time frames are pretty much aligned and then they're moving together, those are your most high probable trade setups. So those are the ones that you pretty much want to look for. Right here, I know it's a little bit choppy, but you can I know it's a little bit choppy, but you can pretty much see price where it pretty much kind of consolidated in here a little bit, and then it started to make a higher low right here, and then higher highs, higher lows were starting to be formed, and it just kept going up from there. And then eventually she ended up coming down, which is where I was trying to take opportunities of up here. If I go to the 30-minute time frame, this is where I tried to take an opportunity, which was not a great opportunity to get in. I would say I was very impatient with this particular entry, and I paid for it. I got in a little bit of profit, and that was what, about like, yeah, it's like 37 pips, 34 pips, something like that, 37, 34, something like that, in profit. And I got stopped out, and she ended up coming back to that higher time frame area, which was good. But during this time, I was not active on the chart, so I wasn't able to take advantage of it, and she went in my direction. So this goes to show you want to wait for that higher time frame, or that 4 hour structure to align first before you get into anything. Because if you wait for price to get to those areas based on 4 hour is closest to the daily, so daily time frame. So it's going to allow you to have those dramatic moves, which you pretty much see over here on the side. So with all of that being said, right here, I noticed that price that came down right here, and then she closed, this bullish candle closed right here, right on the area that had been holding for a long time. But in order for me to try and take buys again, I wanted to see price pretty much do one of these, like come down, come up, come down, and then go up. And for this to even be able to form, I needed to see another one of these green bullish candles close to confirm that higher low based on our 4 hour structure. It didn't do that. Luckily, I was paying attention enough to notice that. And after this candle had closed like this, I was like, okay, there's a possibility that she may, still just go down bearish, and which is pretty much what we got. You see that big old bearish candle that we had. And so in doing so, when I saw that forming, I went to the lower time frames. My first entry time frame is my 30-minute. Second entry time frame is my 15-minute. And the third entry time frame is the 5-minute. The reason why I say it like that, the lower you go, the earlier you can get for an entry, but the less valid the data will actually be. So 30-minute is closest to the hour and the 4 hour time frame. So you're really going to get those thick candles that you want to really make that data valid enough for you to take the best entry or opportunity. So you want to keep these things in mind. So this is pretty much what I did here. I was so when you go down to the 5-minute time frame, like if you can kind of see it, like I pretty much saw that, prices, it came up right here. She made a lower high, lower low. She came right here, lower high, lower low, lower high. And ideally, I wanted my stop loss to be above this level, but I was willing to take a loss right here if she did pull back, but I did not believe she was going to break this level. So, I take a smaller risk here. If it would have stopped me out, cool. Then I just take another opportunity up here. I didn't end up getting stopped out, which was good. And let me see this is what the 10-minute time frame looked like, but I ended up getting in on the 5-minute, I believe. So let me go back to it. After I saw that 5-minute candle form like this, and because structure was so smooth from where I was, even on the H1 chart, on how it was right here, like I just felt it, man. When you're in the market so many times, you can kind of and you see the same patterns over and over and over again. You see the same structure on how it's going, everything. Once you gauge that momentum, it's like the entry is, you're gonna be so confident with the entry. You're like price is like you're so confident that price is going to go in your direction because of the momentum, because of the structure, and how you are pretty much identifying it the right way. So yeah, so this is pretty much the trade, guys. You can see this is a 1 to 21.2 dramatic move. And what's crazy is to show you guys another trick, how I pretty much was able to hold the trade longer like that and hold it out, was this little trick that I like to do sometimes. I would take my Fibonacci, and right where it started, right at the beginning right here, I have it lined up. So every time she would make a lower low, I would ask myself, okay, well, is she going to break the 38.2? She came up, she didn't break 38.2, she went down lower. So I kept holding. Okay, cool. She made the next lower low down here. She did not touch the 38.2 or break it. When I say break, a candle literally has to close above this line. Then I'm like, okay, I'm getting out. It has to close. It can't be active. It has to actually close. So we pretty much were able to just hold this out as much as possible. And she just kept going. And by the time we got down here, I pretty much just made that decision to just get out of the trade. And as you can see, I still could have held it a little bit longer. I could have got some more pips out of that. Just for me, like if I had it from here to here, that's a good, what is that? From here to here, be an extra 120 pips, which would have been great. But you know, like 200 pips, that's a swing, man. So it's like I didn't really want to hold it any longer. I got 200 pips at that rate, you know, in a day, man. That fast was very, very dramatic. So this was the trade, guys. So hopefully you guys enjoyed the video. If you want to learn how to do this too, just check out my day trading course. I put all of my great information, all of my great strategies, all of that stuff will be in there for you guys. I recorded it step by step so I can make it easy. Yeah, all my credibility and everything is on there. So if you guys are interested, definitely check out my website. But other than that, this is how you trade with a small account. And I hope you guys enjoyed the video. See you in the next one. But other than that, guys, that is it for this video. And like always, I'll see you in the next one. Peace.